morning and welcome to The Street on BNN Bloomberg. I'm Roger Peterson. Thank you very much for joining us. Coming up on the show today, Alan Small, Senior Investment Advisor at Alan Small Financial Group, IA Private Wealth, will be joining us for the hour. In 30 minutes, we'll bring you a conversation with European Union Competition Commissioner Teresa Rivera. And we want to hear from you this morning on First Call. Call us with your questions, and we'll have Alan answer as many of them as he can at the end of the show. The number to call, 1-855-326-6266. We'll open the phone lines in about 30 minutes. Also, of course, you can email us, and that email address is firstcall@bellmedia.ca. Now, some of the stories we're tracking for you in the BNN Bloomberg newsroom. Shares of Cleveland Cliffs are down in the pre-market about 3.6%. The steel manufacturer reporting lower fourth quarter revenue and said its 2025 was weighed down by weak production from the automotive industry as well as a weak Canadian market. Cleveland Cliffs shipped 3.8 million tons of steel during the quarter, roughly flat versus a year ago. The steel company says things are improving for 26, and the U.S. trade environment should set the stage for dramatically improved results this year. Shares of Apollo Global are up 3% in the pre-market at this moment. The firm drew in nearly $30 billion U.S. of positive cash flow during the final 3 months of last year, pushing its assets under management to a new high. The firm also beat on profit and revenue, with revenue surging 87% compared to the year before. Apollo had a record quarter for deployment of capital, which helped lift management fees it charges on funds. And now our top line story. It was a volatile week on the markets after Anthropic released a new model that is adept at financial research and pushed into legal services that upended the stocks of legacy software makers. So what will this week bring? We're going to bring out the crystal ball, and Alan Small, he's here for the hour to talk about this. Alan's the Senior Investment Advisor at Alan Small Financial Group, IA Private Wealth. I was away on vacation last week. Apparently, I missed some things. It was quite the ride.
It was, and you mentioned the software stocks, right? I think it's interesting. A lot of the gains that we've been seeing are focused in just a few narrow areas of the market, and the software has been, I guess, the cold side of things, right? And it is the AI companies that are coming out with, plugins or whatever you want to call them, Anthropic, as you mentioned, to rival the software companies. And many believe that over time, it is becoming more and more difficult to be able to price out where these big software companies will be, how much they will earn. Will they have to lower their prices? Names like Salesforce, ServiceNow, Adobe, even Microsoft, we saw a bit of a sell-off. Some of the cybersecurity companies like CrowdStrike, which many people wouldn't really call software, we would really call it cybersecurity, but even they sold off. So it's a bit of a tech sell-off in the software area. I should say a lot of a tech sell-off. A lot of these names down at prices we haven't seen in quite some time. ServiceNow, Salesforce, two of the bigger ones. So
can you not see these companies though embracing AI and working with it, or is there a genuine concern that they might just be completely replaced?
Well, I think I don't think the concern is that they're going to be replaced. I think the concern is more, what are they going to be able to charge for their services? And, what does the market see for them going forward? And when you look at ServiceNow, they deal with pretty much all of the Fortune 500 companies. Salesforce, 90% of all Fortune 500 companies. So these companies are embracing AI, using AI into the suite of services that they're offering companies. But a name like Salesforce, for example, obviously CRM, they also get involved in marketing and other tools like that AI is now starting to do for you automatically. So how much will AI infringe on these businesses? How will these businesses, or what will they report going forward? Will they have to take down their pricing? Will they have to offer other things that they didn't do before, or perhaps less things than they offered before? And that's the concern. And I think that's what investors are telling us. They just don't know how to price in future potential for these businesses. Growth models. What's the growth going to look like? Right now, a name like ServiceNow growing 20% quarter after quarter. Fantastic numbers again this past quarter. We're going to have to see Salesforce in a little bit, but ServiceNow reported fantastic quarter. I thought Microsoft reported a fantastic quarter as well. But because Azure, their cloud business, I think grew 38%.
Instead of 39
they're expecting
or something.
39.40. Stock pulled back. So a little bit maybe disappointing there. But overall, these companies are doing extremely well. I think the worry is what's going to happen in the future.
Is this going to be a year of volatility then, where we'll see weeks like this quite regularly?
I think we will. And I think investors need to expect more volatility. I think investors need to dial back expectations. We've been used to this 15, 20, even greater than 20% returns on the market. I think this year you should be expecting 8, 9, 10% gains in the market. And that's going to mean months like we're seeing now in February. January, we had a bit of a positive month. February, it's been up and down. There's going to be months where I think investors don't make any money, maybe even pull back a little bit. But if we get to June and we're up 4 or 5% on the year, then we're probably right on target for an 8 to 10, 10 to 12% rate of return for the S&P 500. And I think that should be the expectation. So yes, I think there's going to be volatility. It's going to come from many different places. Obviously, AI, geopolitics. We've already seen that quite a bit. What's coming out of Washington. Yeah. That doesn't seem to stop either. So I think individual investors need to take a step back, try to separate the noise from reality. I think if you can do that, you're going to do just fine.
And with AI, what's going to be the biggest concern you think this year for it?
Well, I think, understanding what AI is going to do. Are they going to start to replace certain things? You mentioned legal. You mentioned areas like that, financial areas. What is AI going to replace? Or maybe not replace, but definitely cause businesses to have to reduce what they're offering or reduce pricing to be competitive. I think that is the concern right now with individual investors.
Okay, we'll leave it there, Alan. And I've got lots more to talk about. Up next, we'll take a look at the markets before the bell. Let's see how things are shaping up on the markets now. We'll start with U.S. futures and tech AI concerns still weighing on the markets. You can see they're mostly flat right now after Friday's big surge. We'll see what happens at the bell, though. And heading to Asia. And you can see, look at that, the Nikkei jumping nearly 4%. That on Prime Minister Sanae Takaichi's landslide win and sent the Nikkei soaring. China seeing a chip and AI rebound. They are also up as well today. 1.76% for the Hang Seng, 1.63 for the CSI 300. Heading over to Europe, that Asian chip and AI rally also pushing into the markets there, although you can see the FTSE's off slightly, but the CAC 40 is about a wash, though, and the DAX is up by about 0.4%. Taking a look at the TSX now. Of course, it rebounded on Friday, up nearly 1.5% after Thursday's sell-off. It was up for the week. It's still off last month's record high. Some of the winners and losers from Friday. Byte Farms Limited up 25%. New Gold up 12%. Going the other way, Definity Financial off by 3.27%. And ARC Resources off by more than 10%. And the metals now. They are all back on the positive side. Gold rallying above 5,000 right now. It's up 1.3% and up for the month as well. Silver, after taking a huge hit over the past week or so, plunging from highs near 120. It's now trading just over $80, up by 4.4 for the day. And copper looking to climb back above $6 after stalling the past month. And taking a look at oil now. And you can see yesterday that Western Canadian Select closed up about a percentage point. U.S.-Iran fears easing supply concerns as well. Those are playing on the markets, but in different directions at times. South of the border, what's WTI doing right now? It is up ever so slightly, pretty much a wash, about 63.58%. All right, like Team Canada, we are focusing on gold, and joining us now in the studio, who's been here all morning, Alan Small, Senior Investment Advisor at Alan Small Financial Group, IA Private Wealth. And going to talk about the metals, gold. We saw another crazy week for it, and well, the last month, especially silver, has been extremely volatile.
Yeah, some of the investors will call in and say, I want to buy this safe haven. I want to put some money into something safe, and they call it safe, and they reference gold as being safe. And I always have a problem with that because, as you've seen in the last few weeks, I don't know if gold is such a a safe haven. Obviously, it's a hedge against U.S. dollar. We know that. It's a hedge against the high debt levels that, the G7 nations in general, obviously the U.S. taking on higher and higher debt, lowering interest rates. And that's what's caused the price of gold to move higher, price of silver to move higher. Obviously, those things are in U.S. dollars. But with the volatility as great as it has been, 5,500, over 5,500 in gold, down to 4,700, now back above 5,000 again. We've seen, like you mentioned, silver well above 100. I remember silver when it was, $40.
Yep.
Now
that was only last fall.
Yeah, exactly. And now back up, came down. Now it's at 80, still down a lot from the highs. This is definitely not an asset class for the faint of heart. So I think if you're an investor today and you're hearing all about this gold, all about the metals, the materials, I think you have to understand that, in my opinion, I think it's a volatile asset class. It's not something you're going to put money into and just kind of look the other way. Maybe if you can do that and look at it, 5-10 years from now. But on a day-to-day basis, today is up, last week down, the week before up, et cetera, et cetera. It's tough, but definitely something that I think individual investors can own as a part of a diversified portfolio.
I was going to say, is there room in the portfolio
Absolutely,
for it?
Absolutely. You want those kinds of hedges to offset other things in your portfolio. Obviously, owning either gold itself, certificates themselves, or owning mining companies like Agnico Eagle, Kinross, things like that. So I think it does make sense. At this point in time, tough to overweight materials or gold, silver at these prices. I tend to lean more towards silver, more industrial use right now, whether it's in solar and tech in general. Obviously, silver has more usage than gold, right? Yeah. Gold pretty much,
sits there.
It sits there on your wrist. It looks pretty. On your neck, around your neck, or on your wrist, and not much there. But to me, I think, yes, for a small piece of a portfolio, possibly, but that's kind of where it stops me.
What do you lean towards when it comes to those two? And do you look at other metals too, copper or palladium, things like that? Yeah, do you lean towards the mines or do you lean towards the metal itself?
Yeah, you know what? For a long time, I actually leaned towards the metal itself. Last, I would guess, a few years, I would look at buying an Agnico Eagle and things like that. So I've kind of gone from looking at the metal to looking at the companies themselves. Overall, copper has been a great indicator for economic activity, right? Because it's used in so many places. So seeing copper move higher, I think, is a good thing and bodes well. For a long time, China was bringing in all the copper they can to build out their infrastructure, and that was when we had that super cycle.
And the U.S. did the same with that too, right?
We had the big super cycle at that time, and we here in Canada benefited from that cycle. That cycle went away very quickly, and now is it coming back? Well, not so sure, but overall, I think metals, I think they make up about 20% roughly of the TSX, and gold makes up the majority of that. So owning a small piece, I think, can make sense. At this stage, it's tough to get in. Maybe on a bit of a pullback makes more sense. But buying in at these high prices, some people have even higher targets. I'm kind of taking a wait-and-see approach. I think if you own it, you continue to hold it. I wouldn't recommend adding a whole lot at these prices. As I said, maybe on a pullback.
And what about, you mentioned copper, but what about things like palladium or any other of those metals? Are they worth looking at or just?
I think that you can look at them. I would stick with the more...
the ones you know.
Exactly. The ones that you see more of, the palladium or, even, something that going away from that uranium, things like that for nuclear or anything like that, I think can make sense, again, as a small piece of a portfolio. But again, these are just kind of, offshoots or complementary pieces to any core holding that you're going to have.
And what percentage would you think for your portfolio?
I would say no more than 5-10% at most. To me, I've never been a gold bug, so I know a lot of people know me for that. So for me, it's just difficult for me to understand. I'm a very big bull on the U.S. dollar, on the U.S. economy. I think their pro-business policies will gain strength throughout the year. I think what Trump is doing with respect to tax savings, with respect to business in general, if they continue to bring business back to the United States, which I think they will continue to do, I think that will be eventual strength to the U.S. dollar, strength to the U.S. economy, and that is a negative for some of those materials. So you got to watch out for that.
Okay, we'll leave it there. And we'll be back, though, with Alan. He's a senior investment advisor at Allen Small Financial Group, IA Private Wealth, to see what tech stocks are on his radar with everything that's going on. Time to see what's on the radar for Alan Small, Senior Investment Advisor at Alan Small Financial Group, IA Private Wealth. And Alan, you've got three specific areas of the tech sector on your radar: chip equipment companies, memory chips, and storage companies as well. Let's start with the first one that you're liking, Micron.
Yeah, so Micron, it's a name that obviously benefiting from memory and the opportunity to raise prices because memory chips are in high demand and short supply, and they've been able to raise prices. So all the memory chip companies have been doing extremely well. SK Hynix and Samsung is out. Right before we came on here, I mentioned
it's giving some competition to Micron.
To Micron. So it's been a hot area, and what's been good for a name like Micron has been bad for other companies like Dell and Apple and HP, because they need memory in their devices, in their hardware, in their servers, in their computers. And so what's been good for the memory companies, they've been able to charge higher prices. Now these companies have to pay those higher prices. They're actually suffering for that. So memory has just been one of those areas, as you can see, Micron, a bit of a pullback in the last week or two. But overall, it's just been going like gangbusters. A name that, it's interesting, once that there's a bit of a glut in memory chips, once supply catches up to demand, you tend to see names like Micron really pull back hard. So again, very aggressive move forward can be followed by an aggressive move to the downside. So I would recommend taking profit along the way as Micron, names like Micron in the memory chip business, as it continues to move higher, I definitely would trim some of those profits back.
Okay, and then the second round, chip equipment, memory chips, Western Digital, SanDisk, and Seagate.
Yeah, so these are storage companies. Obviously, you need some place to store the data, and storage companies have just been knocking the lights out, home runs all over the place. I think at one point, SanDisk was up like well over 1,000% in a couple of months.
Soared in the last little while.
It's unbelievable. Western
It's like
Digital,
people forgot about it.
Yeah, and we all did. And name Western Digital, you have up on the screen now. Just look at that chart. It's just unbelievable. It's just the run that these names, Seagate, another one that these names have been on. Again, you just need the storage to store the data for all this information, the AI, the data centers. And the question is, do you get in at these levels? Again, I think if you're holding these names, you continue to trim those profits, take some profit off the table. I don't know if I'd be an aggressive buyer here. I've seen some targets from some analysts a little bit higher. But for me, again, I think you can never go wrong taking some profit off the table. I don't know if you want to get totally out of these names. I think there is more room to run perhaps, but I think you want to trim back some of these profits.
As you're doing it. And last one I want to bring, last two, Lam Research and Applied Materials.
Yeah, chip equipment companies, right? These are the companies that make the equipment that make the chips.
Yeah.
And Lam Research, a name that maybe not too familiar for a lot of investors. Again, just a crazy run that they've been on. Applied Materials as well. Another run. These two companies, these are the two big ones in the world today, benefiting from the equipment that's necessary to create the chips. And the more chips that are necessary, as we know, there's a shortage right now, whether it's Taiwan Semi saying we just can't make chips fast enough, all the chip companies saying they can't make chips fast enough. How much demand are these equipment companies, how much the demand for these companies exists today? It's quite a bit. And it's tough to get in at these levels, but I think you can nibble at some of these names. Applied Materials may be a little cheaper than Lam Research right now, but these are two names that I think make sense for really any growth portfolio, especially if we see a bit of a dip.
And any concerns about demand either easing or AI somehow having an impact on them?
Well, I think demand, it looks like we won't see an ease in demand for a little while as yet. A lot of companies now talking about demand being strong all the way out to 2027 and even maybe even a little bit beyond that. So at least for the foreseeable future, demand is strong, AI, chips, semiconductor, all of that. And if you're owning any companies anywhere in that industry or dealing with that industry and that sector, you're going to be doing quite well.
And what could be a headwind?
It's tough to say. Obviously, at some point, I think the headwinds end up being these companies themselves, right? You're priced to perfection. You can make the case that these companies will continue to do better and better and better. The question becomes at what rate? How fast are they growing their earnings? If they're growing earnings 30% now and they grow earnings 28%, like we saw with Microsoft next quarter, market will sell off because maybe they're saying 30% is as good as it gets. So you almost become a victim of your own success. And I think that is, to me, the biggest fear. These companies will continue to do well. They're fantastically run, great management. But how much longer can they continue to grow earnings at the pace they're growing? Whether you're an NVIDIA, a Taiwan Semi, a Micron, at some point you become a victim of your own success and you pull back maybe a few percent. And then the market says, well, is this as good as it gets? And they sell your stock. So got to be careful about that. Nothing goes to the moon. No stock goes up to the moon. So got to watch for that. But I think these companies will be doing quite well, as I said, maybe out till 2027 and a little bit beyond.
All right, we'll leave it there on that note. But coming up, European Commission Executive Vice President Teresa Ribera spoke to Bloomberg News off the back of 2 EU antitrust investigations as part of their intensive scrutiny of big tech. We'll bring you that conversation after the break. And, of course, our phone lines will open soon for our first call segment. You can reach us at 1-855-326-6266 or send us an email, firstcall@bellmedia.ca. Newmont wants Barrick Mining to improve operations before spinning off assets. According to Bloomberg, Newmont believes it has the power to potentially block the IPO. Barrick announced last week that it plans to spin off its North American gold assets into an IPO, which will include interests in the Dominican Republic, as well as its flagship Nevada joint venture with Newmont. Newmont has been ramping up pressure on Barrick after a string of operational setbacks. Shares of Cleveland-Cliffs are down in the pre-market about 3.6% right now. The steel manufacturer reported lower fourth quarter revenue and said its 2025 was weighed down by weak production from the automotive industry, as well as a weak Canadian market. Cleveland-Cliffs shipped 3.8 million tons of steel during the quarter, roughly flat compared to a year ago. The steel company says things are improving for 2026, and the U.S. trade environment should set the stage for dramatically improved results this year. Shares of Apollo Global are up in the pre-market about 3% right now. The firm drew in nearly $30 billion U.S. of positive cash flow during the final 3 months of last year, pushing its assets under management to a new high. The firm also beat on profit and revenue, with revenue surging 87% compared to the year before. Apollo had a record quarter for deployment of capital, which helped lift management fees it charges on funds. And a quick peek at the markets right now. You can see the Dow is up above 50,000, but it's kind of flat right now. And same with the S&P 500. The Nasdaq's trending downward, off by about 0.17%. Meta was given a European Union warning over policies that block the use of rival artificial intelligence assistants on WhatsApp, raising the possibility of further tensions with the Trump administration over the regulation of U.S. tech companies. For more on this, Bloomberg's Francine Lacqua spoke with European Union Competition Commissioner Teresa Ribera on The Pulse. Take a listen.
Well, I think that it is very obvious that we need to defend and to implement, to enforce our rules, to defend the market, a well-functioning market, a competitive market, where there can be an option for players to provide their offers and for consumers to decide which option they prefer. So the abuse of a dominant position in a given market that prevents any other alternative for final users is not good news for anyone. And it is not good news in Europe. It is not good news in the United States. And in this case, we are worried because we sense that this may be the case when forbidding the access of other providers of AI instruments that use WhatsApp. So this is the message that we wanted to send to Meta. Why we do not start thinking of an interim measure preventing this stop of available options.
Yeah. Commissioner, when you're saying that Meta risks a temporary European Union ban, how do you think the U.S. will react to it?
I think that for anyone being at the forefront of any institution, we respect the enforcement of the law. So I don't know how it may be read by any government, but my sense is that this is not connected to politics, but connected to well-functioning markets and protection of consumers.
I'm not sure the Trump administration will view it necessarily in exactly the same way, but I want to ask you a more broad question about AI and regulation. Obviously, this is a technology that will disrupt the world in a number of different ways. It's a new sort of area of functioning. Are we going to see more cases like what we're seeing against Meta, against other technology firms? And what kind of concerns are you seeing in terms of concentration and antitrust in the world of AI more broadly?
We are not looking into the origin or the headquarters of any given company. In this announcement that we have made today, these interim measures, Italy has already taken a similar approach. We are opening a procedure so that if Meta does not agree, they can defend, they can take whatever information they bring to the table to respond to our question, and it is not a final decision. I think that AI is changing the world. We all, consumers, citizens, providers of public services, providers of private services, industrials, rely very much on the quick development of digital services and AI. And I think that it is good that there can be many players that could challenge the traditional incumbents. So it's good to be successful, and it is also important to ensure that those looking into the future are not prevented to develop their services because of those that have succeeded in the past. Great to compete, great to have these open markets for everybody.
And in another area that's not quite as new as AI, but still relatively new, is this world of streaming. And we now have this sort of potential acquisition by Netflix of Warner Brothers. This is something that certainly will attract some scrutiny from you. In a sort of preliminary fashion, what kind of concentration risk do you see from those deals? Do you see one of the two offers as more risky? And have you had any contact with any of the CEOs involved?
No, we haven't got any contact, and of course it is quite clear that this is something which is not quite clear yet what it is going to happen. So we follow what it is going on, and we will be paying attention to whatever operation, consolidation, acquisition may take place. For the time being, it is not clear. So the bids are there, the discussions are there. We will have an eye on what it could mean for the European markets, as it is the case in the United States. But there is no operation to be assessed yet now. Not yet. Sorry.
Commissioner, could you talk to us also a little bit about Google? So what's your vision for how Google should operate in the EU? And could you ever see a Google that's actually different in the EU than it is to the US?
I think that Google is quite a relevant player both in the United States and the European Union. And I think that in certain markets, in certain services, they have a very relevant position. In others, they are not the front runners. There are others that have taken a higher share of the market. And I think that it is quite important to remind ourselves that we came up with a regulation to introduce predictability on what it is the expectations in terms of the obligations and the rights in an upfront manner, so that any gatekeeper, anyone having a relevant position in a given market could know upfront what it could mean to ensure that users were protected.
Since the last time you spoke to Bloomberg, has your thinking about Google's ad tech changed at all?
Sorry, that I didn't get your question.
What's next for Google? Is there anything in terms of ad tech or something else that you don't like when you look at Google?
Oh, yes. Sorry. I hadn't heard that. No, I think that that is where we are right now. And I know that Google is making effort and having conversations with the services so to ensure that this very important flourishing business case in terms of advertising through the different technological platforms are not restricted or is being biased by any given preference towards Google's decisions, toward Google's priorities or preferences. And the efforts are ongoing. So we have heard, we have paid attention to the decisions being made in the United States, including by the courts, and I think that it is good that we go along similar lines in the different jurisdictions, but the process is not yet over. So we will be coming up once we have a clear understanding on how far we can ensure that the final solution is equal, inclusive, and does not discriminate competitors.
Still ahead, Alan Small has his eye on Canada's GDP. His takeaway from the last few months, Canada is in rough shape. We'll find out why he thinks that after the break. And of course, our phone lines are open. Alan Small, Senior Investment Advisor at Alan Small Financial Group, IA Private Wealth, is taking your questions. The number 1-855-326-6266. You can also email us, first call at bellmedia.ca. Alan Small, Senior Investment Advisor at Alan Small Financial Group, IA Private Wealth, is with us this hour. And right now we're talking about Canada's GDP. And you're not super excited about the numbers we've seen over the last little while.
No, I don't think anyone is, right? You hear the Bank of Canada talk about our economy growing in and around 1%, maybe slightly above. You hear the Bank of Canada say in their last meeting that not much has changed since the previous meeting, coming to this one. And I guess that was good enough to keep interest rates on hold. Also, Tiff Macklin said recently, his comments were, cutting rates isn't going to make up for perhaps some fiscal policy that needs to perhaps be changed going forward. So I'm just not sure, what our government, what the Bank of Canada is doing at this point in time. If you look back over the last 10 months, I think 7 are red with respect to growth. Out of 10, we just lost 25,000 jobs, albeit, yes, a lot of them or most were part-time jobs, but still a negative number. Inflation is still just over 2%. There's definitely a lot of wiggle room there. And I think more important to me, our neighbors to the south now are our number one competitor over here. They used to be our big brother. They used to be our number one ally. But I think, as we all know, things have changed, right? President Trump wants things back to the U.S. They want to draw business to the U.S. Their inflation rate's closer to 3%, and they're still considering cutting interest rates. Their GDP actually could be 4.5%, 5% for the first quarter of this year, and they're still thinking about cutting rates. Their one beautiful bill, or whatever the president calls it, no tax on tips, reducing tax on overtime, no tax on overtime. So they're doing the things that I believe are necessary for pro-growth strategies. What are we doing here right now? I know our prime minister is doing a great job getting business, talking trade around the world, but what are we doing for people today? And that is my concern.
What would you like to see? Because there are Canadian companies that are looking at the U.S. and are moving to the U.S. What do we need to do to keep them?
I think we need to make the conditions and the environment good for business to come here, stay here, and grow here. I think we need to keep more money in the hands of Canadians. Perhaps a tax cut. I've heard it from many different places. TD Economics, not that long ago, mentioned it. I know someone like David Rosenberg, who's been on this show many times, talked a bit about how we need to make Canada a tax haven, perhaps, to compete with the likes of the United States. I know he feels that Canada's in a recession already. Obviously, technically, we're not in a recession. We saw negative growth in quarter 2, positive in quarter 3, perhaps negative in quarter 4. So technically not in a recession, but we're pretty darn close. So to me, I think a tax cut would make sense. A lot of people said we can't afford it. Well,
I was going to say, can we afford a tax cut? I mean, we're already running deficits at $80 billion.
Right. Well, look at the United States. Can they afford a tax cut? Can they afford to cut interest rates? And they're doing it because they want to put the policies in place to bring foreign investment back to their country. Why would someone come to Canada versus the U.S. right now? What environment are we creating here? I know, talking to Premier Ford, he mentioned $28 billion in new business coming into Ontario last year. Fantastic. But imagine if we had a better environment in terms of tax, in terms of interest rates, to be able to grow. Pro-growth policies, how much more would Ontario be able to bring in? That is my question, and I think we can do it. Let's focus on inside of Canada right now, along with making trade deals with South Korea and Europeans and everyone else, but let's all focus on what we can do today. I get it. A lot of the things the Prime Minister is doing is for the future, 10 years from now or greater. What are we doing today to make things better for Canadians? I struggle with that.
And are Canadian companies ready for that? The idea that the U.S. may not be our key trading partner or our ally in many ways. Are they adjusting, do you think, or are they struggling with that?
Well, I think they're going to continue to struggle with that. You know, when you send 80%, 70 to 80% of what we pull out of the ground and what we build to the U.S., and now the U.S. is saying, well, we may not take as much from you, whether it's in automotive, whether it's steel, aluminum, whatever metals, whatever the tariffs. You know, that's why CUSMA is such a big deal, right? We're hearing about the negotiations. Yeah. Talked to David Patterson in Washington, D.C. He says negotiations are going on and a deal he thinks will get done. The question is, what's it going to look like? We are obviously protected. Most of the stuff is protected under CUSMA right now. But if that deal goes away, what is it going to mean for businesses here? It's not going to be good. So we need to focus on what we can do within Canada to make the environment better for businesses, to make the environment better for all of us. Keep more money in our hands. And what are we going to do with it? We're going to spend it, and we're going to grow the economy. And I think that's what we need to do here.
Have we seen, there was the talk about interprovincial barriers coming down. Have we seen that happen, or is that kind of stalled too, it seems like? It
seems like it's stalled. I haven't really heard many deals going on. You know, there's been a lot of talk between the provinces, but have we seen big deals happening now? Have we seen these barriers come down? We've heard that when the barriers do come down, it could mean a big boost to GDP. We're just not seeing it as yet because GDP is still stalling out at 1%.
Okay, on that note, we'll take a break right now. But coming up, we'll look at some notable analyst calls and recommendations moving the markets, including one on Oracle. Let's take a look at some of the notable analyst calls and recommendations. OpenAI is set to exceed investors' expectations in terms of model performance and capital raising over the next few weeks, according to D.A. Davidson's analyst Gil Luria. Luria notes that OpenAI's behavior led to underperformance in shares of NVIDIA, Microsoft, CoreWeave, and especially Oracle in recent months. Davidson saying that a, quote, revamped OpenAI will return to its position as Google's top challenger and with a fresh stack of capital be able to live up to its obligations this year, including to Oracle. Also, Luria raised the recommendation on Oracle to buy from neutral, setting the price target at 180 US, implying a 26% increase from last price. And for more on this, get some reaction. Let's bring back Alan Small, Senior Investment Advisor at Alan Small Financial Group, IA Private Wealth. Alan, Oracle had that massive boom midway through the year, but...
Yeah, you know, and rightfully, as you said, you know, a lot to do with OpenAI. One of their biggest customers in their build-out is OpenAI, right? And when OpenAI, when they were called into question whether they could actually live up to the amount of money that they had contracts for. They needed to raise a lot of money to pay for these obligations. A lot of people think that they weren't going to do it. And so we saw, as you mentioned, names like Oracle getting hit quite hard, Microsoft, CoreWeave, NVIDIA. That's kind of on that side of the tech space. And on the other side, you have names like, you know, Broadcom and Google and other names, Marvell. These are more specific, you know, custom chips versus more general. And so now OpenAI, obviously, this analyst believes that OpenAI will raise a lot of money, over $100 billion, I think is the talk. And if they get that money, they will be able to continue to forge ahead with their obligations, their commitments. And companies like Oracle that have big contracts with OpenAI, AMD is another one that's in that grouping of companies as well. It'll bode well for a name like Oracle. Now, I believe a name like Oracle, even before all the AI talk, they were a fantastic company, a massive company, software. They obviously now into data center infrastructure. They're a name to me that to lose 60% of your value, and that's where kind of where they sit right now. Once upon a time, trading well above $300 a share, as you can see there. now down to, well, they're up today, it looks like in pre-market to 150, but they were, 143 at the end of last week. Is that sell-off overdone? I believe it is. And I think it's a name that you could actually start to buy. Another software name that's been getting hit with many other software companies, but mainly because of the OpenAI situation. And if OpenAI can live up to their obligations, I think a lot of these names move a lot higher.
Okay, we'll leave it on that note. But when we come back, Alan Small, the Senior Investment Advisor at Alan Small Financial Group, IA Private Wealth. We'll take your questions on First Call. Time for First Call and first email, and that will come from Dan. And he says, between CP and CNR, do you have a preference? Is there an entry point you'd be waiting for or attractive at current levels? Alan.
Great question. I think CP has done better, if you had to compare the two, for the last little while. I've been more partial, actually, CN, unfortunately. I think the levels for a CN at this point are quite low, trading at levels that you normally don't see for a name like CN, but obviously reflecting the economy. And as you can see on the chart there, it's been kind of range bound for the most part. CN is tough to buy these names when you're looking at where the growth is going to come from. We're hearing in grains, things like that, that the shipments have been doing well. But overall, I just think right now you can enter into a name like CN at these levels in the 130s. I know it was below that just recently, and it's popped back up. I think long term, I think this is a name, if you believe the economy will continue to strengthen in Canada, North America, I think this is a name you can actually buy here and hold it for the long term. I would not be looking for big gains in the short run, but names that you could buy, good quality companies, good management, they'll benefit over the long term. Right now, actually, trucking is probably outperforming the rails for now. Maybe trucking is an area you want to look at instead of the rails. But I like CN right now at its price. I think it's relatively cheap, but you're going to have to. It's a long-term investment, in my opinion.
All right. Next up, an email from Megan. Alphabet is looking at a bond sale. I own the stock. It's about $15 billion is what they're looking at. What does that mean for me?
Good question. And, I think it could mean that perhaps investors or the market in general gets a little jittery. They committed a lot of money in their last report, Google did, to AI spend, right? How many hundreds of billions of dollars are Google and Meta and Microsoft and Amazon spending on AI going forward? Google has had a tremendous run. Alphabet has had a tremendous run over the past year, probably the best performing Mag 7 name out of the bunch. A name that I stopped buying, actually. If you own it, I just think valuation now, it is no longer. Once upon a time, it was the cheapest Mag 7 name. It was the name that it just made sense to me to buy. Obviously, in the chip space now, having their own chips, custom chips, to me, Alphabet made sense. Their Gemini 3 rivaling ChatGPT. Now they're saying Gemini is the better product, and they're the winner long term. Well, now OpenAI's come out with their latest version, ChatGPT, to rival Gemini. So there's a back and forth there. But to me, on valuation, if you own it, I continue to hold it. Again, I'm not adding to it at these levels on a dip, perhaps. I think it can move higher slowly, but I think there are other names in that space that make more sense. Maybe a Meta, maybe a Microsoft. Some of the other Mag 7 names I think are better value at this time.
And going up for bonds, that's not that unusual.
No, definitely not.
Right.
They need to raise money to be able to afford their spend, right?
Yeah.
And, will that affect the treasury market overall? When you get these big cap tech names, borrowing money, it tends to make perhaps at times the treasury market and bond market a little wonky for a short period of time. But overall, I just think that, we all know Google's good for the money. So I don't think there's a worry there. But yeah, I think if any time you're finding out that a company's taking on more debt, it could be a bit of a negative for the stock price.
Okay, and let's get in an email from Ben. He says, good morning. Looking for your thoughts on Novo Nordisk.
Novo Nordisk, it is obviously one of the two big drug companies in the GLP-1 space, the weight loss space. Obviously, everybody knows Ozempic and drugs like that. Unfortunately for them, Eli Lilly has been outperforming them, right? Their drugs that do the same thing as Novo, unfortunately, have outperformed. And I say unfortunately for Novo's sake. So for me, Eli Lilly's been the name versus Novo for quite some time. I think Eli Lilly's pipeline is a lot more diverse than Novo's is. And obviously Novo, European name, Lilly, US name. I think there's some benefits there as well. So to me, for me, I've been more on the Lilly camp, Eli Lilly camp versus the Novo. I think if you're looking at a drug company, Eli Lilly and some others make a lot more sense.
Now, Novo's up today on the news that it's suing Hims and Hers Health for the knockoffs on the obesity pills. So right now we're getting a reaction to that, but longer term?
Yeah, I think that'll be short term. They got to continue to compete against Eli Lilly. That's their biggest competitor. They're doing things. I saw an interview with their CEO in the last week talking about what they're doing to compete. But I think right now, I'm still in the Lilly camp versus the Novo camp.
Okay, we'll wrap it up there, Alan. Thanks as always for joining us. Always appreciated. And that is it for us here on The Street. Again, thank you to Alan Small, Senior Investment Advisor at Alan Small Financial Group, IA Private Wealth, for joining us today. And Jamel's up next with the Open. Trading gets underway in a little more than 30 minutes. Have a great day.